Okay, so good morning to everybody that's watching this live. If you want to learn how to trade, just go ahead and go to Discord. Easiest way is to go to the website, Kel's Crypto. The links will be all in the description box below. Go there, and on the very top it says, let me mute myself over here. So if you just go to the website and click on join Discord, and it'll send you straight to it. So the first thing we want to do is when we first start scalping is we want to see the direction of the trend, and we only want to go with the trend. And so really up to you, your preference of what higher time frame you want to use. I like using the 2 hour. Some people use the 12 hour, which I think it's a lot, especially if you're scalping. Some people even use the 4 and the 6 hour. I still think that's a lot of room, because in a 4 hour chart, for example, you can see that the 4 hour chart, you can see that we're in a downtrend. But if you go to the 2 hour chart, you can see that we're starting to go sideways. So which one would you want to do on there? Do you want to go sideways and start bouncing around, or do you want to try to take a chance of the 4 hour and go short on the 4 hour when on the 2 hour it's bouncing around, and this could be the end of the downtrend and now a correction's happening? So that's why I stick with the 2 hour chart. I stick with the 2 hour chart and as the trend direction, and I look at the mom indicator down here. You can let me title them. We go in here, get rid of it so I can title it. Yeah, so the bottom one is going to be the mom. The middle one is going to be a custom indicator that I've had created for me. Down here is the mom. That just means momentum, whatever momentum indicator you want to use. And this is just a custom indicator, similar to the MACD, but so we'll call it MACD, MACD. And then this one is going to be just a trend direction, and this one is going to be a EMA 15. Since you're scalping, that's what you really want to do. So now we know that our trend is downwards on the 2 hour chart. Now we just got to go to the 5 minute chart, and we just wait for entries. The entries that we want to take is when the mom is maxed out and it turned red on us and started heading down, while it's going underneath the 15, preferably both of them, but the 15 is the main one. As long as there's room in there for us to get it, to get some pretty good movement for us, then we want to do that. Let me move these over so I can adjust them on the 5 minute chart. Okay, well, there's the mom, there's that one. I guess I'll just have to rewrite them. This one is MACD, and these are just the simple moving averages. The trend direction, that's a custom trend direction, and this one is just the EMA. All right, so that's what we do. Now it's just a waiting game, and we wait. I will mark them. I will mark the entries live so you can see them in live time. And again, if you want to join the Discord, it's simple. Just go to the website that's in the description box below. And if it's not there, you'll be in there after the video is done. So just go there, click on join Discord, and we'll go from there. Then that's it. And then you join, and then you just join there and go. So let's see. Actually, it looks like I can put the information in there real quick. So then you will have it in the description box below. There it is. Let me finish setting up the video so you can still see it. And then let's get in there. We're on the 5-minute chart. Let me scroll down and save it. Save. There you go. All right, so now it's saved. Now you can look at it. You can look at the live underneath the description box, and you'll be able to see the details on there. And then we get to the channel so I can pull it up so I can read the chat. Okay. All right, now we're set up. So now the most important thing, the most important thing that you want to keep in mind is that you will be trading less than your waiting time. So if you don't have patience, trading is definitely not going to be you're not going to be good at trading because you need to wait for the entries. So again, what we're looking for right now is we know that our custom MACD is starting to turn over on us. That means that we want a little correction. We can definitely see two shoulders over here and two heads, and then we look like we might have two shoulders. On those shoulders, if they do form, that's when we were going to want to try to go short on. So that's what we're going to wait on. And we really want to wait for this to come up and take it. Then we'll mark them, and we are going to use the MT4, or if you use Binance, if you're non-American and you have a Binance, then you can use Binance or any other place that you can scalp the market and leverage trade, because we're going to leverage 5 to 10%. We will keep track of it over here. We will have this live feed for roughly 3 hours. We want to try to trade starting with $500. We're going to trade $250 positions, and we want to try to make a couple $100 today. All right, with that said, now we just wait for the entry. We just wait for it, and move this up here so I can control it. And that's it. So you just wait for it. If you on YouTube, just remember that the YouTube lag is about 30 seconds late. So you might enter in late. If you want to have real-time entry, the best place to be is in Discord, because they'll get we're fixing to go short. And we already know the coin that we're on. We're on XTC on the perpetuity contract because we're trying to leverage trade. That's the future contract, and that's what we're going to use off of FTX. So it's a XTC perpetuity contract to USD on the 5-minute chart, FTX. Speaking of FTX, if you don't have an FTX contract, that's where we'll be trading at this morning on MT4. Go ahead and click that link in the description box below, and you get free stuff for doing it. But this is the only coin that we're going to leverage trade. We're not going to try to go and search the market for entries or anything like that. We will take positions, and we will try to target 0.03 to 0.05, which will give us, if you're leverage trading 5%, it's going to give you 1.5% profit. If you're leverage trading 10%, it's going to give you about 3% profit. So that's a really good return, especially if you're going to do it 5-10 times a day. It's going to be great, and it's going to be great returns for you. Other than that, we just wait, and as soon as we have a trade, I'll let you know. You also want to remember to every time the chart closes on, because we're using the 2-hour as the trend direction, that 2-hour chart closes in 11 minutes, I think. Let's see. It closes in 11 minutes. So in 11 minutes, we want to come back over here. We want to look at the direction of our oscillators, and we also want to look and see where the price action is, because if the price action is heading the other directions, then we're going to try to catch the bottom of the trend reversal. So we do want to keep that in mind. In 10 minutes, we'll come back to the 2-hour chart and we'll look and check it out. Scalping is extremely easy as long as you have patience. As long as you have patience, you're gonna be good. We want to look also for, you can see that we're using hollow candles, and some of them are filled in. That's the custom indicator of our custom MACD, and that's telling us that it looks like we might have a good entry. It's not foolproof, but it looks like we're going to it does work. It does help. Another thing that I want to point out is that you can see that we're in a downtrend. We had 2 massive candles, and then we had a one candle that filled both of these 2 candles. The reason we didn't go short here on this big massive candle is because our oscillators are pointing up. Oscillators will always lead price action. As long as you have the proper settings, they will lead the price action. It might not be as quick as you would like, because that's where you get your divergences from. But if you follow your oscillators, they won't do you wrong. The reason we did not take this position on this big old candlestick, 0.47%, is because our oscillators are pointing up. Both of them are pointing up, and we're right against that EMA. It wasn't a good safe position, and now you can see why we didn't take that position. But right now, as of right now, the trend is down. If our oscillators on the 2-hour chart turn up, then we'll switch from shorts to longs, and we'll go long on them. But we just want to make sure that we get good, solid entries. We don't want to rush anything. We want to take the positions and target 0.3 to 0.5, which will give us on 10% leverage, will give us 3 to 5% per trade. And so that's pretty good. Let's see, off a $250 trade, 250 times 5%. Oops, 250 times 5%. It's about a $12.50 per trade. And $12.50. If we did that 5 times a day, you're looking at about $62, $62 a day just off of that, and you're only risking $250. That is a full-time job. 8 hours, and we're looking at what, $7.25 is minimum wage. 8 hours times 7.25. You're looking at $58 a day. So you can literally work 3 or 4 hours in the mornings if you want, and you can have a full-time job as long as you have patience, learn how to trade. Divergences are extremely beautiful and really well worth waiting for. And I'll show you, here's one right here. Here's the peak of our dotted line. Here's the peak of that dotted line. Here is that dotted line down here. We can see that the oscillator is staying below while the price action is heading up. So people, what this means is that people are buying these little dips, because they think this was the reversal down here. So the people that don't know how to read indicators are buying all these little dips right here, buying all these little dips. And then what that does is that pushes this price action up, but the oscillator is saying, hey, that's a lie. That's not true. That's not where we're going. We're heading back down. And so this is called a regular divergence, regular bearish divergence. So the price action's above it, the oscillator's behind it. And what do? We wait for our mom indicator to turn over and turn red on us. So we didn't take any of these because we don't take short positions on green candles unless it's starting to go sideways on us.
But right here, we're heading up, and look right here. Our mom oscillator has turned down. We have a double peak. We have the divergence. This is a safe entry, and you can see that the next candlestick was 0.47 and the next one was 0.46. So you almost made 1%. If we would have been up at that time, that was probably about 1%. At 10 times, you made 10%. Your money would be $225 off a $250 trade. It's not bad, and you're only in it 10 minutes. That's the beautiful thing about working on a 5-minute chart. You just got to be very conservative of your entries, and you made you got really good entry, super good entry, and a safe entry, and you would have made 1%. 5 times leverage, you made 5%. 10 times, you'd made 25%, or you'd have made 10%. So that's one of the things that you will learn by following this is that my favorite thing to trade is divergences, because you see them before they happen. So for example, on the 2-hour chart, you can see that this is our peak down here. This is the bottom of our dotted line. So we know that we can put a line there because we don't have a lower low. So you can see that this is the oscillator right there. And so where's that at? That is right there. Anything below this line right here, anything below this line right here is going to come back to that line as long as your mom oscillator is starting to head up. So anything that dips below this is coming back to this line. Like this candle right here, this is the red candlestick. This red candlestick is coming back over to the what is that, 3.9956. I'll bet whatever you want to bet that is going to come back up to that moving at, or the line right here. This line right here is going to come back up there. Why? Because price action always follows momentum. Momentum is number one. The momentum indicator will lead the way. This price action is coming back over there. Is it going to come back over there right now? That's 0.36% away. Is it going to come back over there right now? We don't know, but it will hit that within the next couple of hours. So we want to try to get the best entry to go there. So we just wait and see. If you take it blindly right now, I would not leverage trade because it could dip back down, because we are in a downtrend still. Even though that the price action and the oscillators are starting to push up, price action has not caught up to it yet. So we want to wait for the price action to catch up. Now we know our target, where we're going to target at right there. So the deeper we go, the more percentages we're going to make. So if you would have taken that positions right here off of it, that's 1.3%. But we will hit this. We will hit this divergence right here. Make it a different color so we can see it. Let me see. Red and yellow. Well, blue sounds good. The light blue. And it looks like we might hit it right now, but yeah, anytime you have a divergence and you can mark it properly, that is your target. It's going to come back to there, because the price action, the momentum indicator is going to pull it to that divergence. It's going to pull it to there, and it looks like we might hit it here pretty soon. That's one of the beautiful things about using higher time frames. You can see the divergences play out, but you wouldn't want to try to take this on a shorter time frame. You wouldn't want to take this on a higher time frame anyway. Yeah, so this price action or the divergence target is 3.9956. So if you look right here at the C right here, you can see that that's where it's at, 3.9956, and you can see it when it hits the line. Divergences are extremely easy to trade, super safe to trade. As long as you learn how to do it. And that's one of the things you will learn in the Discord, is because it's my favorite thing to trade. I only trade divergences. I don't trade candlestick patterns that often. I don't trade bounces and any of this other junk. But I will trade every single divergences. Regular divergences is my favorite, though you could have hidden divergences, which just means that the oscillator is and the price action are opposite than the regular divergence. But it's not my favorite thing to trade. Regular divergences are pretty spot on. They're pretty close to 100% accurate, and hidden divergences are about 60 to 80% or 70 to 80% accurate. So, but yeah, so again, the number one thing that we want to do is we want to wait. We're still right at that moving average. Another thing is that we won't take trades along this moving average. This is a trend direction. We won't take them unless we bounce off of it, or we break through it and we start heading up. But when it starts doing this stuff right here, that's how you get wrecked in your trading portfolio, because now this is called the war zone. I coined that phrase. So if you hear anybody else, that means they watch my videos. But this is called the war zone. The bears and the bulls are fighting. Who's going to win? We don't know. We don't know because it could go either way. It could go up. It could go down. Who knows? But this is the war zone. We don't want to mess with this war zone. We want to ambush people. We don't want to go into full blast war with someone and try to win out. Now, if you had $1 billion or $1 trillion, then by all means, the war zone is your friend, because now you can manipulate it. Well, we don't. We only have $250. We're starting with the $500 portfolio. And we're going to trade the $500 portfolio, and we're going to try to make a couple $100 a day just live, so you can see that how easy it is to trade and stuff. But yeah, the war zone we don't mess with. This is the war zone we don't mess with. The smaller battlefield zone, the 15 EMA, you can play around with that, because that one's not that important. But the battle zone, the war zone, you don't want to mess with, because you could get wrecked that way. The battlefield you can play with. There's just a smaller moving average. The war zone you want to stay away from. But we will hit this target. There's no question about it. We have a clear as day divergence on the 2-hour chart, and so we will hit that. And we also will only scalp one coin every single morning. I'll put a poll out on the Discord. Discord's brand new, so there's not that many people in there. And look, we almost hit it. We will hit it. There's absolutely no question. Divergences you'll be able to hit the divergences. They're extremely great for trading, and they do really well. That target is 3.9956. And our high was 3.9948. So we're right below it. We're about, well, almost hit it. 3.55. We're 1/1000th of a penny away from hitting our target of the divergence target. Then there it is. We hit it. See how easy it is to trade the divergences. And that also tells you that every time it goes below here, it's going to come back to this divergence line. Every time it goes above it, you can't count on that coming down, because it is a bullish divergence that we have. So anytime it goes above, you don't want to try to target that divergence. But anytime that it's under it, you're going to be able to do it. And look what it did. It got rejected at the divergence target. Why? Because price action hasn't caught up to the divergence yet. And so every time that it does, it'll pop back and it will play around with this divergence until it makes up its mind where it wants to go, up or down. Divergences are the easiest way to trade crypto, to trade stocks, to trade Forex, as long as you have the proper settings. But yeah, that's how easy it is. Now we just wait. Again, it's mostly a waiting game. But if you do 5 to 10 trades a day, that's a full-time job, and you can do that. If the market's moving really well, you can do that within a couple hours. You can do it within 2-3 hours.
Looks like we're fixing to have a little quick entry for scalping. We want to make sure that it doesn't turn on us, because it did get rejected from that moving average, got rejected from our divergence target. Again, we will come back and hit this divergence target again, because the oscillators on the higher time frame are going to pull that up. So that's one thing we want to make sure that that we don't get pulled up right now. And on the oscillator, we do have a hidden divergence. So we have this oscillator right here, and it's pointing upwards. And then we have this right here, and we're having it downwards. So you can see that we have a hidden divergence on there. They're not that great to trade. They're not that safe to trade, but they do work. So we want to see this candle pretty big, and as long as it closes there, we want to use the closing time. So we have a minute left in this chart. We want to see it really big red candlestick for us. And we're underneath the 15. That's a really good sign for us. And we're only going to target point 0.3 to 0.5, and we'll set it up that way. It doesn't look like we're going to get there. We have 30 seconds left. We want to take ultra conservative trades, not we don't want to try to force anything. Let's see what the 2-hour chart is looking like. 2-hour chart is still red on us. Our mom oscillator is starting to go sideways, and so is our custom MACD. And you can see that the dots are still green on us. That means that we're still trying to push up, trying to catch up to it. And this is not a good candlestick to go in on because, see, we don't want to have that much wick at the bottom unless it's a big candlestick. See, there's no wick on the bottom. That means the price action wasn't being pulled up. Right here, this is a big candlestick. The price action is pulled up. So if you went short on here, you probably have a 50-50 chance of hitting your target. So we don't want to play those odds. We want to be better than that. We want to have really good positions, but this is you can see that it's a solid red. It is a decent entry. It's not the best for us, but if you did go in there, probably maybe hit it, but you also know that you're going to come back up to this divergence target over here. We really want to have a little less wick on there for it to go before we go into it. But this is a 50-50 chance. So if you wanted to take this particular trade, you'd want to do less than $250. You'd want to do like a $50 to $100 target, because if you didn't hit your target, then you'd not lose as much. But there's no way that I would take that position. The only reason I would not take that position is because the candlestick itself has a pretty deep wick at the bottom. That means that this divergence target is still trying to pull the price action up to it. So I wouldn't take that position. If you are just joining us, I see there's a couple people watching. If you are just joining us, if you want to join the Discord, all you got to do is go to the website. It's in the description box below. Go there, hit the Discord, join the Discord chat, and join, because you'll get entries quicker than you will on YouTube, because YouTube is lagging for us. So we will be live every single morning for a couple hours, live trading. Each morning will be a different coin, Monday through Friday, sometimes on the weekend. But if you want to learn how to trade divergences, it's extremely easy, very safe, and great. So now we see that we have a high over here, and we have a high over here, and we have a divergence on the hidden divergence on the price action on the custom MACD, and you can see that it's trying to pull down. However, this divergence target is pretty strong for us. It will pull back to this divergence target again, because the higher time frames are still pointing up for it. All right, well, I'm going to put it on mute and
just wait for the entry. I'll be here on the chat if you want to send a message on the YouTube chat. I'll answer them, and I'll jump on and answer them on the video. Looks like we're going to, if you did take that position, looks like you're going to hit the target. You're definitely in the profit right now. So if you take that position at 10% leverage, you're at 3.8%. You might as well protect it, and now you're at 4.3% profit. You almost hit the 0.5. It's a really good target to always target for is 0.05, because it's 5% if you make it in your leverage trading. And if you do that, again, if you do that 5-6 times a day, and it only take you a couple hours, because you can look at the chart and you only trade when there's momentum in there. We really want to trade away from these these average moving averages, because again, the war zone and the battle zone are really difficult to trade, even for professional traders. Someone that does it for a living, it's still difficult for them. If they say that it's not, they're lying. It is difficult to judge which way it's going to go, because you never know. Everything could be pointing up, and then it just drops on you. That's what the beautiful thing about trading is that you can you have to learn the math, that you got to learn it. If it was easy and everyone could do it, everyone would be a bazillionaire. But it's not easy. It takes discipline, training, and practice, and watching the charts all the time for you to master them. And though it gets easier to identify trades and signals when it as you get accustomed to the coin that you're trading. But cryptocurrency has tons. I hate trading Bitcoin. I don't like trading Bitcoin. It doesn't move as well as it should, and everyone wants to get into Bitcoin because they think that's where you're going to make money, and that's just not true. Where you're going to make money is the altcoins. Altcoins is where you're going to make the most money. Yeah, you are definitely in profit right now. So if you did take that position, so you'd want to protect it at 4.5% profit. You definitely would want to protect that. And you can see that we're using at least a 1-to-1 trading. That's because that our stop loss was going to be right above the average, or the moving average, because if it did jump up there, we would have to take a stop loss. But if you did take that position, but it looks like you're going to hit your 1% or your 0.5%. Not too bad. Looks like that divergence target is pulling that price back up. So hopefully, if you did take that trade, you took your profits. It's pretty good profits. So. Well, if you took that trade, you hit your 0.5, and if you did that at 5x, then you made 2.5%. At 10x, you made 5.1%. Not too bad. And you only did that off of, should have only done that off of a quarter of your portfolio instead of your $500 instead of half of it, like we will be trading. But you can see that this did pull it down. However, we're going to come back to this line. Right now, I don't know, but we will come back to this line. As long as the oscillator doesn't make a lower low, which on the higher time frames is pointing up, it looks like we will be coming back to that line. Look at it just drop now. I want to move this over so we can have a clean chart to mess with. Get rid of that because we hit our target of 0.05. A lot of the times that if you wanted to, if you close below the 0.05, you'd want to put your stop loss there. Move your stop loss there, and then try to ride it as far as you can, as long as you close below there. But you can see that that is doing pretty good on that trade. Again, I wouldn't have taken that trade because we did come up here and test this moving average or the divergence target, and then it didn't have a big candlestick for us. We wanted a big candlestick that we wanted to go on. This one was not a good one for us, therefore you wanted to pass on it. But if you did take that trade, congrats, you hit your first target of the day. And it looks like we're fixing on the mom oscillator. It looks like we're fixing to turn back up, which means that we're going to look for a long position, a conservative long position, and you would have got stopped out if you set your stop loss at 0.5. And here is the bottom of the price action. So we don't want to mark up our charts too much, but and we don't want to have it confused with our oscillator one or our divergence target. So we want to change that color. So if the price action goes below while the oscillators are going up, anything below this will pull that up. So that's something we want to look for. We want to identify the divergences before they happen. Price action, we want the price action to be lower while the oscillator is higher because the regular divergences are good. And you can see how strong that the divergence target is on the 2-hour chart. It's not letting this price action go below it too much because it's still trying to suck it up to that price action or to the divergence target. You can see how powerful this is. It's like a magnet to the price action until it divorces itself from this divergence target. It's going to continue to pull it that way. So that's one of the things you got to keep in mind, that as long as you're under this divergence and you're taking short positions, because that's the way that the trend is going, you don't want to try to hold on to the position too long, because if you hold on to it too long, you're going to get stuck like this one. This one took you 20 minutes to get to your target, and then it killed your target in just a 5-minute chart. Now it looks like we're trying to refill it right now. But you got to just be careful because this is a magnet. This will pull the price action back up to it. and see the price action is heading down while the oscillator is heading up, that's called a divergence. Right now, we don't have one, but we want the price action to go below that, because if it goes below that, we will have one. So now the price action touched it, but see, it got rejected from it right now. Why? Because the oscillators are powerful. They're magnets. They're going to push it towards there. So if we get rejected right here, we might bounce below it a little bit, but it will come back to this. As long as your oscillator doesn't make a lower low, you're going to come back to this place. So a lot of times I would take this, because you know that this is a divergence for you. You know that because you can clearly see it. Here is your price action. Anything below it, it came back to it. So, and you also know that you want to target 0.3. So a lot of times I'll come down here and I'll put this little box here. And if it touches this middle line or the bottom line, in a small position, I would take this small position, and this would be my target. This would be my target to go to, because you know this divergence, as long as you have the price act, or the custom MACD or the MOM indicator heading up there, heading up, while your price action is heading down, you're coming to that divergence magnet. There's zero question about it. It will come back there 100% of the time, as long as your oscillator doesn't make a lower low. If your oscillator makes a lower low, then it kills the divergence, and you don't have a divergence anymore. But as long as you do, as long as you have that, you're going to be able to take that position. So a lot of times I'll just sit there and I'll play around with it, and I'll mark it, because I know that this is where it is. This is my target. It's where I want to get out at. And if I get down to the 0.3 or 0.6, I'll take that position blindly, because I know that it's going to come up there, as long as this oscillator doesn't move down and makes it a lower low. You can see that it's strong right now, so most likely it's not going to. But again, this is a support and a resistant level also, and you can see that it's having a hard time breaking through there. So if it does break through there, that means that most likely we're going to bounce right back up there. And we don't really want to hold on to trades too long, right? Because if we're leverage trading, especially if you're leverage trading, I have some friends that leverage trade on Binance. Binance charges you a fee for borrowing. So if you are leverage trading and you are borrowing from them, we don't want to hold on to those positions that long, because the longer you hold on to it, the more fees that you stack up, the more interest that you stack up. So we don't want to do that. You can see how that divergence, or the price action, is having a hard time breaking that. That's because the oscillator is was pushed up pretty hard, and now it's still having a small correction, but your mom oscillator is still heading up. So it's having a hard time breaking that, because remember, momentum will always lead price action. It will always lead it. And as long as we don't go below this, we'll go blindly into this entry anywhere between there and have a really quick stop loss. I just have it right here just to get it ready, because if we do jump down there real quick, we will take a small position, a quarter position in there. You see how the oscillator bottom is good support right now for it. It tried to break it twice, didn't break it, and looks like we're starting to try to head back up. Do you see how powerful divergences are with support and resistant levels? See, a lot of people will say that the support is because it's a low on the price action. That's not true. It is a low. That's without a doubt, that's true. But that is not why the price action is not breaking through there. The price action is not breaking through there because momentum always leads price action. It will always lead it. The price action has to catch up to your momentum indicators. Has to. And so therefore, if you go and you try to study and you try to look at people and they say, oh, this is a lower low, that means it bounced off the lower low. Why did it bounce off the lower low? And if they say, oh, because it's just the bottom of it, and that's the bottom of the price action, I wouldn't even mess with them, because they don't know the reason why this is bouncing off of this low right here is because your momentum indicators are pushing it up. That is the reason why, not because this is a low and now it became a support. That's not the reason. However, it is a support, but the reason it's a support is because your momentum indicators are forcing it to be a support on there. And that this is also a good clarity and good peace of mind that you know that this level right here is really strong. It's bounced off of there a couple of times because of the oscillators, and that means that if it keeps pushing down, you could take this position safely. You can take this position. Why? Because you know this is a magnet for that price action.
See how powerful that divergence target is on the higher time frame? Came up and touched it twice. Once, twice. I mean, it touched it several times, but since we've been trading, if you use this as your target, anything below that, you're going to be able to come back and touch that divergence target. It's very easy trading. It's again, it's super easy to trade on there. You can see that if you wanted to use this as your support, you found support there. Oscillators coming up, you have a divergence, and you would have went up there. You'd be at 80%, 0.8% right now. So again, divergences are the easiest way to trade crypto and to make money off of it. And you would have had 2 trades already, and you would be if you would have taken this trade, this one jumped on you pretty quick. You would have done really well on that one. And you can also see that as long as you're messing with this this trend indicator, this moving average trend line, it's bouncing in there. It doesn't know what it wants to do. You're having huge swings right now, and you're bouncing between this divergence target, which we've already hit twice. You've already hit it twice. A lot of times, if it does this, what I usually do is I'll take this and it's not worth risking a little bit. So I would go down here and I'll put this down here just like this. And as long as we have a buy target, a buy signal, I mean, right here, let me change the color of this to, let's change it to red. Yeah, let's change it to red. As long as we come down here and we touch this red and we still have a buy signal on the lower time frames, anything close to this, you know, is going to come back to that. So you know that if you target here, you had to be 1% to here. So if you go in there and you take that position, you know that you're going to hit this. You might hold it longer than what you want, but you know you're going to hit this, and you can see that it's getting rejected from it again. So it's super simple to use. Divergences are pretty powerful. And also you don't, another thing that a lot of traders will get into is that they will hit their target, and if it goes back up further, they're like, well, I lost this amount of money. Well, if you trade that way and you think that way, you're never going to be satisfied. So what you want to think and how your mind should be is, here's my entry, here's my target, I hit it. No matter what, I hit my target, and whatever it does after that, I'm just looking for the next entry to go into. And if you're just joining us and you want to know what all these lines are, just these, I try to label them just so we can know what they are. At the bottom is our momentum indicators, just a traditional momentum indicator. This is our custom MACD. That's what's changing the bar colors of this of these candlesticks, is a custom indicator. All this can be accessed if you just join the Discord. And how you join the Discord is you go to the website that's in the description box below, and you click on join the chat Discord, and you click on it and it'll send you straight to the Discord. There is a free section on there, so just go join it and learn how to trade. It's very simple, very easy. Trading, we trade divergences because that is the safest, easiest way to trade, as long as you have the proper settings on your oscillators and you want to have two oscillators, no matter which ones you use. You could use any of them, but I just prefer to use the custom MACD that I had created for me, and the custom momentum indicator that I had created for me. And also you can get access to them for a small fee if you join the Discord, but you got to be a member of the Discord to get access to them. This blue line right here is the 2-hour divergence. I can mark that. 2-hour divergence, and that's just our target line. This is just a thing that says join Discord. This is our custom MACD, and this is our custom momentum indicator. We already had one trade already, and we already hit 0.5. If you 10x'd it, you don't really want to go over 10x because then you get into really scary territory. But if you 10x it, you made 5% already off of that particular trade. And you never risked a whole bunch of money, and we have a quick stop loss because no one's perfect. And so we don't have a divergence on the smaller time frame because we have the oscillators up, and so is the price actions up. So we don't have a divergence, but we really wanted to break away from this this moving average. So remember, this is our 1% target, and we'll if we go in there, we don't want to go in there just blindly on this one though. The reason we don't want to go blindly on this one, we would go blindly on this one because it was so high, such a great divergence for us. It would have been beautiful. However, this one, we don't want to go blindly in, because if it does push down and it goes past this, that means we have a lower low, and now we don't have a divergence. So we want to be careful. We don't want to take a position on this one. We want a buy signal on this red line, and our target would be the 2-hour divergence target. So we want to have good entries on this one. This one you can go blindly in because the 2 hours so close, it's gonna suck it up and pull it back up, at least to this one. This one you go blindly into. This one you don't want to go blindly into. You want to wait for a good entry to go in there.
If you don't want scalping signals, you can also get altcoin signals in our Discord too. So you don't have to scalp the market. Scalping is fun. But if you want longer positions, then join the Discord. Look at that divergence target. Let's hit it one time, 2 times for us. We'll keep track of it. It's what a wonderful way to trade. One, let's do them in yellow. Hit it on us at 1, 2, 1%. Hit it once. We'll count how many times it hits it. That is a absolutely wonderful, easy, conservative target every time you take a position to go long right now. That should be your target, because it will pull back to it as long as the oscillator on the higher time frames, because we're on the 5-minute chart, but this is a 2-hour chart divergence target. As long as the oscillator is still pointing up, you can take a safe position and target that almost every single time. Now we have everything pushing down right now. The price action pushing down. We have the MACD
custom MACD indicator. Looks like it's trying to turn over on us. And our mom oscillator is trying to turn over on us too. This would give us a divergence on the mom indicator to the price action. However, if you don't get in on it right away, skip it. And that's one of the problems that you have with some custom indicators with divergences, identifying them. They will identify it as as a divergence, but it would repaint. It means that you should have got in right here, but you didn't know if this was going to give you a divergence on there. So you know that you would head down from here because you're divergence. But however, you're 20 minutes late because we're on a 5-minute chart. You're 20 minutes late. So a lot of people will go in here and it'll turn up on you because that movement, that momentum is already gone from this divergence. So that's why it's not even worth trying to put a divergence indicator on your charts because they repaint. To do it live, you don't have to. You don't have a confirmation on there. That's one of the big reasons why if you trade this way, you can trade it and you can see the divergence and you wait for confirmation. There's no way to know that if this is going to head back down because everything's pushing up on you. How do you know that this is going to push up? Now you have it. Not 20 minutes later, you have a clear divergence heading down, but it's not. It's the movement's over. So you got to be careful and not jump in right there. Again, if you want to join the Discord, go to the website and go join the Discord. I will go live every single morning, Monday through Friday, and I will trade scalp live trading one particular coin every single morning just to show you how easy it is to trade. Trading View, or sorry, YouTube, sorry, I couldn't think of the name. YouTube will have a delay in the video streaming, which is like 30 seconds. So if you want to join and get live signals, the best way to do that is to join the Discord, because you will get it in the Discord. 3 times it's touched this divergence and it's been rejected. This, again, I can't stress this enough, that this 2-hour divergence target is absolutely key to you. And you don't always have a divergence on the 2-hour chart. So, but if you do, you got to take full advantage of it. You got to take complete advantage of it and trade it as many times as you possibly can. If we pop above this divergence, that doesn't mean you have a bearish divergence. That means you don't have anything. But as long as you're under, as long as it can be
0.1% underneath it, and you have a divergence. It could be way down here and you just have a divergence. It all depends on where it's at. And you can see that we touched it 3 times. Looks like third time's the charm. It looks like we'll be breaking upwards. And if we do be breaking upwards, then we will we'll look to go long, because then now we're in a long territory. And on the 2-hour chart, I have it on my other screen. On the 2-hour chart, it looks like we're pushing up. Looks like third time is the charm for us. Now we're going to be breaking up. We want our moving averages to cross. We want to retest, then we go long. So easy to trade. You just got to be patient, have patience, have a good setup and a good mentor, which I think that I had I learned a lot on my own, but I learned a lot from Top Dog Trading. I bought all his courses when I was learning how to trade, and such amazing. Now he doesn't focus on crypto, so I tweaked his way of trading a little bit, but well worth the money spent. Look at it go. Broke through the divergence, and now we're heading up. Now we just want a correction. We can see that we have crossings over here. We want a correction to go long. We don't want to go blindly into it. See, this is where a lot of people will FOMO in. Don't do that. Don't jump in, because as soon as you jump in, it might have its correction that we're looking for, and we'll go from there. But never, ever jump in just because. Okay, we're going to get rid of this the 2-hour divergence number or title, but we're going to keep this on there. We want to keep this on there just in case we jump back down there. We can start playing with it again. So remember, we're on a 5-minute chart. We're using the 2-hour chart as our
trend leading indicator. If you want to learn how to trade, just go ahead and join the Discord. Again, this is the momentum indicator. This is a custom MACD, custom momentum indicator. Join our Discord and learn how to trade live. We'll scalp the market every single morning for a couple hours just to show you how easy it is. Now, if we come back down here and test this 2-hour divergence level, that would be a good entry, because on the 2-hour chart, we're sitting pretty on there. And the tops over here, we don't have a divergence on there because we have a high here, higher high, and a higher high. So you don't even have a divergence on the lower time frames anymore. On the oscillator itself, you can see that we have a head and shoulders. If we break that, then we're probably going to come up way up. We'll jump over to a 2-hour chart and see how high we think it's going to go. Take a position, a longer position, less leverage, and let it ride up. Don't FOMO in. Do not jump in just because you see the price action skyrocketing or dropping. It's not worth the stress. And you can see that we're trying to break that. We will break it. It looks like we will, because the price action is moving up. So if you go out, scroll out a little bit, you can definitely see that we have a low here. Higher high, higher high, higher high. So that means that we're probably going to come up here and retest over here. So if you did take a position, this is definitely going to want to be your target at 408.68. But we want to have a good entry. We don't want to, and this right here is a bearish formation. However, it doesn't mean that on the lower time frames. You can't use candlestick patterns as often on lower time frames because the movements are so radical in crypto that not all of them are going to work out. Now, what do you call it? Big candles? They do work most of the time. They do work most of the time. So those are good to stay with. And one of the good things, if you're scalping the market, you want to use a perpetuity contract because those are the future contracts. If you go to a live chart, say that you go to Binance chart on there and it's a live chart,
that's a live action. You want the perpetuity futures contract because it's going to tell you where they think the price is going to be. There's going to be a discrepancy between the two. So it's always a good tool to use the perpetuity contract. And you can see that we break this, we're gonna be coming up. We're gonna be coming up to here. We're gonna retest that. How far is that? Let's see. From here to here, looks like it's 1.78, 1.76%, which is if you 10x that, which you would never do. If you leverage this, you'd only want to leverage it 1 or 2%, or 1 or 2 times. I mean, sorry. But again, never FOMO out. If you have the mindset of look at the price, I'm losing all this entry price, and by the time you make up that mind, you're going to be in there. Wait for the correction, because it's a chart. Price action doesn't always go up. It doesn't always go down. You want it to go down, retest. Now we're clearly in a upward momentum, right? So what we want to do is we want to come down in a retest. If we can retest this and stay above the 2-hour divergence target, that is absolutely great for us. We already have our crossover for us. Now we want to retest. See, here's the crossover right here, but you know that you wouldn't have tried to go along there. Why? Because your oscillators and everything's pointing downwards. So what you want is you want to wait for the perfect entry so you don't stress out. Because if you would have FOMO'd in right here, yeah, you would have made money. Stupid, reckless. You would make you would end up losing money more than you make money. Wait for the good entries. Wait for them. It'll save you heartache. It'll save you troubles, stress. It'll stop all that. Again, this 2-hour divergence target, absolutely beautiful every time. You can go back. Here's where it started. This is where it started at. Popped below it. Look, popped below it immediately. Tested it. Dipped way down. Targeted again. Dipped again. Targeted it again. Dipped. Hit it. Dipped. Hit it. Dipped. Now broke through it. It will always 100% of the time break through the divergence target as long as the oscillator is still pointing up. And the oscillator, to move an oscillator on a higher time frame is really difficult. It has to be hours and sometimes days to move it below. So it's a really good tool to use to take the positions lower on there and then target on there. And you can see that now it's having a hard time breaking over this. So what we would do is we'd go to the 2-hour chart. One of the things I need to do is I need to object tree. We want to hide all those. I will get rid of that. What we want to do is we want to hide those so we can look at everything. Line. Let's see. I need to visual. I can just get rid of it. Let's go to the 2-hour chart, get rid of it, and bring it right back. Move drawings. You can see that right there is going to be our target on there. We have a fully engulfed candlestick right now, and we know that the price action right now is pushing up. We have 40 minutes left in this chart. That means that looks like we're trying to push up, having a hard time pushing up. And the reason we're having a hard time pushing up is because the EMAs are pushing down while the oscillators are pushing up. So you're going to have a bunch of bump and movements in between there. Let's go back to the 2-hour or the 5-minute chart. 2-hour chart is what we use as the directional indicator. And you can see that it looks like we're going to come back down there. We're going to test this on there. And if we could dip way back down there again, then we'll take a position. Our mom indicator, I don't even know where this line came from, but our mom indicator is starting to turn over, which means that we're fixing to have a correction. Looks like we're fixing to have a correction. We want it to turn all the way over. Then we will have a hidden divergence on the oscillator. We would have on the mom, we have a lower low. On price action, we have a higher high. That's a divergence, a hidden divergence, sorry. Custom MACD and a custom mom indicator on there. Good stuff. Easy trading, easy peasy. And if you want to join Discord, go to the website, join Discord. And you see, we're coming for that correction. If you had a FOMO'd in, you would have to take a quick exit because you jumped in too late. We want to wait for the entries, wait for the beautiful entries, save us stress and time and heartache. Do, do, do. You see how much time you have to wait? That's why you need to, that's why it's best to have a YouTube channel that you watch, listen to the Bible, preaching, something while you wait. If you don't have something to distract you, you'll get restless and you'll try to force stuff, and that's when you get in trouble. Patience is the key. Patience is the key. Let's mark this because as soon as we break this, we're coming here. Let's mark this price label. This is bam 4, and this one is 40267. If we break that, we're going to jump up about 6 cents, a little more than 6 cents, and that'd be our target. Every morning we'll be live, and if you have any questions, just type it in the box on YouTube and I'll be able to see it. Looks like we broke it. Close above it, stay above it. This will be our target for sure. I would not leverage trade that 5 or 10% because if it does drip down, there's a chance that you get liquidated or just be holding on to it longer than what you want. But again, you can trade on the 5-minute chart, super easy. You can see that we're still above it. That's why I had this price line on there, so you can see that we're clearly above it. If you did take it when you do that, we'll see how much that is. let's see, that's about 1.26%. Definitely don't leverage trade that. That's a big target to try to hit at leverage trading, because that means that you'd have to hold it. Go 1 to 1, 1 to 2, 1 to 3 if you really want to be reckless, but I would not. I wouldn't go more than that. And if you leverage trade more than 10%, say you traded 50% on the trading, that's just reckless. Yeah, you're going to make money every now and then, but it doesn't always work out, so it's not worth trading that crazy prices. It's a lot easier just to
Well, you're definitely in profit now. Let's go ahead and mark that. Fixing to hit our target. Two to one, pretty good. Here's 1 to 1.5 is usually what people go for. And you can see that we had that. It's going to go ahead and be our, you can put that at your stop loss, or you can ride it up, but you're in profit, so you want to protect it, right? So
Yeah, so you get 1.5 is a good risk to reward. You're gonna hit it for sure. Oh, you're gonna hit the 4.085, 4.0875. Sorry, that you're gonna hit. You just gotta wait for it. Hopefully, it doesn't dip to you too much, but I have zero doubt that we're not gonna hit that. Easy trading, good conservative entries, and you learn how to trade just by watching these videos. And we will trade every single morning. I'll go live every single morning. So go ahead and hit that little bell notification so you can jump on here and go live. We'll trade a different coin every single day, and we'll target just that particular coin. It's not worth the stress trying to flip through a bunch of coins, especially when you're trying to scalp and leverage trade. It's not worth all the stress on there. But you're in profit already today, so that's pretty good. Move this over here. It's your target. Marked up the chart quite a bit. You're definitely in profit. So if you want to protect it, it's really up to you. We didn't have the correction. This moving average pulled it up. This is where the entry was. This is where our target is, 4.0857, and we will hit that. The mom oscillator is heading up. We really want it to look like this instead of like this, because when this goes like this, then it usually goes sideways before it comes back down. What was this first one? 0.05. Let me mark that on there. Hit the 0.05. 0.50% at 5x. That would be, let me do them, pull out my little handy dandy calculator. It's 1250. And maybe be 25, 10x equals 25. Oh, let me make it smaller, a lot smaller, right? Let's change the color to green. All right, here's the first one. Second one, we only wanted to go 1-to-1. This one is if you leverage trade 5 to 10%, 5 or 10%. If you do more, then you can do the math on it. We don't want to get below 1% on there. So we want to mark that 1% stop loss right now. There's our 1%. So if we come down there, we'd rather take the profits for us and take another entry on there. So that's where you want to have your stop loss at. That's a $250. You could even done your whole portfolio, because this is such a really conservative breakout trade. You could have really done your whole portfolio, but we really want to manage the risk to reward. So that's going to be a $250 trade, and it's only going to be 1-to-1. Or 2-to-1 if you since we're leverage trading, we'll do 2-to-1 on there. And looks like we almost got stopped out, and we did. So let's mark that one up. There's another successful trade for us. If you want to hold on to it and ride it up, that's just reckless. I think I did the math wrong on there. So it's going to be 1%, 250 times 1%. times 2 be a $5 trade. This is a $5 trade. You made $5 off of that. 1% target, 5x equals 5 profits. 10x. See how it bounced back and now it's starting to go up. I'd rather go with guaranteed money than to try to gamble. We're not into gambling. That's a $10 trade. 10. Okay. That's this one. This one I had to redo because I messed up on it because I was like, man, that sounds low. $250 trade times 0.5% equals, and we did it times 5 is 625. 625, and this one's going to be 1250. There we go. All right, we want to make sure we have correct numbers on there. Good stuff. Can go ahead and erase some of this stuff. We'll keep this on there because it's going to be our target. We can go ahead and get rid of that. We're going to move this over just so we can have room on there. We can see that here is we're going to move this over. That's where it tested. I'm going to keep all this on there just so people can see it as we go. And here's the correction that we really wanted. Pretty deep correction. That'd be great for us. Wait for our mom oscillator to turn back up on us. Our custom MACD to turn back up. We go long, target 4.0857. Here's the turnover. We're gonna try to go short real quick. It's a great entry right there. Target points. Get over there. We're gonna target 0.05. At least 0.05. We have the turnover on our oscillators. We might bounce back up, but that's okay. This is where we're going to target. So be trade number 3. We're gonna 5-10 exit and see where we go. Super easy peasy. This is a correction on this. This is a correction on the uptrend that we just popped up. Looks like we're gonna be heading down. We're gonna try to target 0.05. That means that we're gonna, if we do, this is gonna be what our targets are going to be. And now you just wait. But you can see why this is a good entry. We have a big body candlestick. Oscillators are pushing down. Mom has turned over, started turning red on us. It's a good entry, safe, conservative entry. Is it going to go our way? Most likely. Sometimes they don't. Most of the time they do. We're gonna target that 1 point or the 0.5. At 0.03, we're definitely going to protect the profits. We don't want to get out of profit, that's for sure. Let's mark there it is. And we're in profit now. This is a successful trade, though we want to target to hit the 0.3. Hit our 0.3. Let's get over there. If it does like something like this, don't get worried, because that's just people buying the little dips. The oscillators are pushing down. The worst case scenario is that we close out at 0.3 on there, which it will come back down and test. If it jumps up on us, don't be worried. Don't close it out at a negative, because remember, we're on a 5-minute chart. There's a lot of movement going on in a 5-minute chart. Oscillators are pushing down. So it's not worth it. If we don't get below the 0.3 on this particular candle, then that's going to be our target. That's where we're going to close it at, because we're going to protect the profits. We're not going to get out of profits and let it go negative on us. We want to protect those profits. So don't worry about that. Don't freak out. Momentum indicators will always lead the price action. Just like it did here, just like it did here, just like it did right here, right here, right here. If it starts going slow like this on you, then we just target 0.3. If it goes fast on you, we target 0.5. So it all depends. But just don't freak out. If the oscillator turns up on you, it's okay. It's part of trading. Don't stress out. Since we didn't break the 3, well, we did hit our 3, but since we didn't, we're going to target that 0.3 and take profits. We're not going to try to target 0.5. It's not worth the risk on it. It's not worth the stress. Remember, trading can be stress-free as long as you learn how to trade, protect the trades, and go with the flow, go with the divergence. Super simple, super easy. And if you choose to target 0.5, I'll leave it on there just in case. This is the bottom of the 0.3. This is 0.48. This is still the moving or the momentum indicators are pushing down. That means that what looks like we're still going to come down, still going to target to 0.3, 0.5 at leverage, and we're gonna be good. Right now we're $22.32 and made so far on this video. Well, we're fixing to make the 1250 on there. But yeah, simple, super simple, super easy to trade, stress-free trade, relax, go with it. Don't watch the price action. That's just going to get you wrecked. Watch the momentum. Momentum will lead the price action every single time. Fixing to hit the 0.5. See how momentum oscillators, if you have them set just right, will lead your price action. So that means that when it starts bouncing, you don't have to worry about it. You could take your profits at 0.3, set your stop loss at 0.3, target the 0.5, and the 0.5. You definitely don't want to try to target more than that, though it could drop down there, but you don't want to try to target more than that, because that EMA is right there. And it most likely is going to bounce off of that EMA. So you want to definitely, if you target 0.5, that's where you want to get in and out. You don't want to sit around and wait for it. You want to get out. Get out. And there it is. We hit it. There you go. It's that simple. It is that simple. Literally, let's see how long this has been. And I'm going to go live every single morning just to help people learn how to trade. We started right here. In 2 hours, we made $25, $30. That's an average of $15 per hour. That's more than minimum wage. There's a $7.25. I'm going to end this live stream. If you want to learn how to trade, join Discord. Showed you on how to do that. All you do is go to Kel's Crypto, hit this little banner that says Discord, join, go right into it. We're 3 for 3 for today. I hope you learned something. See y'all tomorrow.